Welcome to Market Overtime here on Schwab Network. I'm Diane King Hall. Every market day right here from the New York Stock Exchange, we discuss the biggest stock moves and macro storylines impacting every tick higher and lower. Chances are if you're investing in the market, you probably have some ETF exposure. Today, we're chatting with the CEO of a firm that's responsible for several significant funds with exposure to semiconductors, gold, and much more. It's our pleasure to welcome to the show Jan VanEck, CEO of VanEck Funds. Congrats to your group celebrating its 70th anniversary, Jan. And now you all have more than $160 billion in assets under management. So first, just talk to me a little bit about what this milestone means to you all.
Well, it's just listen, we try to look at the markets and go through market cycles. We all want to survive, right? And the world is changing so much, so that we thought it was a good time to step back and just appreciate what we've done and look forward to the future.
Okay, speaking of the future, one of the themes that has consistently been at the forefront over the past going on 3 years now, it feels like, is AI. And that's obviously a theme that you all invest in. You all take a thematic approach. So tell us a little bit about the lens that you look at AI through.
Sure. Let me just take a minute and describe our firm's investment philosophy, Diane.
Absolutely.
Which is, we call it macro investing, which isn't very helpful, but what we say is putting your portfolio together. Are you exposed to stocks? Are you exposed to bonds? Are you exposed to gold? That's like the most important question. If you're invested with Mag 7, they've all done well, right? So you want to be in the right sectors of the market. So what do you look at to give yourself a perspective on what you should be invested in today's market? And first of all, we like to take a long-term perspective, which sounds silly, but let me suggest to you 4 things that will matter when we're sitting here 10 years from now in 2035. So number one, the federal budget deficit by any historical perspective, it's never been as high in US history, and we have full employment. So I would think all of the financial markets are really affected by how we're dealing with that problem. That's number one. Number two might be a little bit of a surprise, but India at its rate of economic growth is going to approach the size of Europe in 10 years when we're sitting here in 2035. So we say, okay, what are the takeaways from some kind of very likely scenario as that? Thirdly, we look at the changing economic weightings in the world, and one of our takeaways is that gold is really emerging or re-emerging as the world's leading currency. So that's number 3. And the last point, and we don't have to talk about it too much, but what happened this year with the stablecoin bill is, to me, the 3rd most important piece of bank deregulation in US history. So we had Alexander Hamilton set up the financial system, we had FDR save it, and now we are allowing technology companies to compete against banks. So all of our personal finances are all around our checking accounts, right?
Yeah.
But now technology companies could use stable coins to do payments, even savings. So we know in 2035, almost for sure, that's going to be a bigger part. Like apps are already a part of our life,
right.
But banks are going to continue to play a less of a role in people's financial lives.
So let me ask you is that good or bad off of that? When you say that is, kind of the 3rd most momentous moment, when you think of those kind of moments, this is not where I anticipated this going, but I have to follow up on that. Sure. Is that good or bad, or is that the wrong way to look at this?
Again, the main question is, what does it mean for people's portfolios? I would say probably that one, even though it matters a lot for those of us in the industry and will change winners and losers. I'm not sure it matters for people's portfolios. It's sort of like, listen, we expect companies to use the cheapest database, just to drive their costs down, and they're going to use the lowest cost payment system, and if stablecoins is part of that, that's what they're going to do.
The one question I thought about asking you, and is are we in an AI bubble? Because people keep asking that question, but I want to phrase it this way: not are we in a bubble? Because there are those who argue, yes, we are. So, if that's the premise, where are we in that?
Yeah, thanks for bringing us back to that. So, technology is one of those things that really affects financial markets. I like to go back in history and say the largest non-financial sector in US history was actually the railroads. And that was because the railroad knitted the country together, created a consumer market, and the railroads as a percent of the stock market actually were higher than the AI companies today. People worry about the top 10 stocks being 40% of the S&P. It was higher back then. But let's look at, so what is this technology doing and what's the structure of it? Basically, if you try to do a very simple model, demand for AI processing is growing so fast, it's like a rocket ship. It's growing 38 times in the last 12 months. So even Satya Nadella, the head of Microsoft, said, we can't project this. This is crazy. Like, I can't even tell you what's going to happen next month, right? So that's craziness number one. Craziness number two is you've got Nvidia that says they're going to come out with a new computer every year, and that's dropping costs by 90%. So you've got demand going like this and costs falling, and then better LLMs or better software is also driving costs down. So what does that all mean for my portfolio? It means that we know this is all driven because demand is insatiable. So I feel very comfortable that AI is at such a big weighting in the S&P. In fact, over the last couple of months, I've been saying could be even higher. Because the last point is they're generating more revenue with the same number or fewer number of people. Right? Amazon laid off workers 2 weeks ago. That's an unbelievable profit machine, right? If you can keep growing revenue and cutting costs.
That begets a philosophical question, but I'm going to bookmark that and potentially come back to that. Let me ask you this. So it does seem like demand is insatiable because, most recently you had Nvidia CEO Jensen Huang saying that from Taiwan Semi, they need basically more of the tools to keep up with the demand. When you think about that, what are the layers of, or let me ask this, what inning do you see us being in this AI cycle? Is it about the infrastructure build out, and what are you watching for in terms of the choke points?
Yeah, I would say, first of all, for the next 2 years, they're going to be completely busy and sold out of their chips. So we think, if anything, the Nvidia earnings expectations that Wall Street has, and that's sometimes you have a perspective by sitting back a little bit, they're too low. So we think Nvidia and the semis are still very attractive because there's no way that they're not going to keep building these data centers. So that's number one. The number two, the thing in the kind of AI ecosystem that we'd like to point out is how unbelievably successful OpenAI has been. As a single company, they are now getting 800 million monthly users. So they're way ahead of everyone else, way ahead. And then, but they also don't have as much revenue as everyone else, right? So can they pay for it? But I guess our feeling is because they're so far ahead of everyone else, they will find a way to get that equipment paid for.
So let me ask you this. One of your notes, you talk about the gateway to commerce risk as it relates to OpenAI and how it might dominate traffic or potentially lead to a bottleneck or act as a gatekeeper. How do you perceive that, do you perceive that as a risk or as an opportunity, or a little bit of both?
It's sort of like this historical macro voice in me. I can't get it out of my head. It's just the world is changing so fast. It's like literally for the last 30 years, all we've cared about is, does your company website come up when someone does a Google search? That's really been e-commerce, right? The American consumer lives on Google. Now the American consumer is living on chat, GPT. It's totally changing. So what does that mean? Today, VanEck's website, 0 to 20% of website traffic is coming directly from AI prompts. That's number one, and that's good, but that's looking to grow. And guess what? Like, of the AI chat volume that goes to Amazon.com, guess who has 90% market share? 90, OpenAI. It's all OpenAI. Right, so like OpenAI, you would have thought 3 years ago, can anyone compete with Amazon for books and all the stuff we buy on Amazon? Now, since all the traffic is going through OpenAI, OpenAI has partnered with 2 companies that can do the payments and have all the inventory, Walmart and Shopify. So now that suddenly OpenAI with those two companies is competing against Amazon in their core business. It's like inconceivable that would have happened before.
Absolutely, and it makes me think of, there was a conversation I heard the other day recently here at the exchange. It was a sidebar conversation, and you know how Googling has become basically a verb, right? Just Google it, right? I heard a young woman say to her colleague, just chat it. And I was like, are we at that phase now where it's becoming a verb, in terms of our lexicon, right? When you think about all the excitement around it, you talked about railroads giving the historical perspective and the percentage of dominance they had at the time. How do you monitor risk or the kind of, I guess, crowded nature of the AI trade, if you will?
Yeah, I mean, look, I guess at the end of the day, you have to use traditional metrics like the PE, forward PE of Nvidia. So that's just very simplistically something I look at. And I'm just saying, for a company that effectively has what I would call a hardware monopoly over this new technology, okay, there are threats and there are other players, but basically they're the new mainframe provider of the AI era. I'm really just not worried about the competitive threats to Nvidia. And so 30 times forward earnings for a company that I think has a lot of demand for its products is not a crazy price.
Do you expect, when you think into 2026, do you expect AI as a kind of thematic, and when you think about your ETFs or just overall, do you expect that to still be one of the main themes thematic investing? It's
a great question. I've been asking myself that. I don't know, a lot of what we've been talking about in 2025 for investors is not just the semiconductors, but also the subsidiary beneficiaries of the build out. So nuclear power investments have done very well, like everything relating to data centers. Bitcoin miners that have pivoted to AI have been in the stratosphere, right? So I think a lot of that's overdone. That is overdone. Nvidia I'm okay with because they have the monopoly, but I think some of these subsidiary investments, so personally, even though we have ETFs in those areas, I'm a little oriented towards profit taking.
Okay. Given the run that we've seen so far.
Yeah.
Let's talk a little bit about another space where you all operate, and that's gold. We've seen some massive outperformance in this year in gold. Last year, in 2024, you saw gold in the S&P 500 essentially moving in lockstep. This year, gold has overtaken that. Yes, we're not currently at record levels, but there's been a lot of excitement around gold. What's your view on it as a thematic investment currently?
I guess from the 10-year perspective, I really like gold. So we started pounding the table on Bitcoin and gold in 2023. Again, so just some history on VanEck. My father started the first gold fund in 1968. And at that time, gold was pegged to the US dollar at $35 an ounce. So it was a pretty risky thing to say inflation is coming and this thing that's pegged is going to depeg. And gold, of course, went from $35 an ounce to over $800 an ounce. So I guess what we see now is that the role of the US and the US financial system is becoming less important in the world. And so I really see this as a decade-long trend where people like India's economy, they don't want to be dollar-centric. China's economy, they don't want to be dollar-centric. So I just think people are looking for a second currency, and gold is serving that role.
Are you worried about de-dollarization? Is that why you see that as the trajectory for gold?
Yeah, I don't worry about it because I think it's natural, right? So I think it's not bad for the world economy or the U.S. that gold has a higher role in our financial system. But yes, what I was describing we call de-dollarization, and I think it's going to last a lot longer. U.S. investors are still not piling on board, which is what you'd normally expect, right?
Right, yes. So you're paying more attention to central bank buying?
Correct.
Okay. Let me ask you this, because you mentioned Bitcoin, and you all pounding the table on both Bitcoin and gold, and there are those, the Bitcoin believers and crypto hippies, as I'm told they're called. That's what they say they call themselves, even the buttoned up ones. Bitcoin has had quite a run recently, but it's pulled back. We're not sitting near the highs. They look at it as digital gold. Do you consider it less, or the least risky of the kind of crypto layers that we look at? And is it less, or do you look at it similarly to gold? How do you evaluate Bitcoin?
I think they're very similar in terms of their role in people's portfolios. It's sort of a store of assets, and they both have limited supply. VanEck was actually the first ETF sponsor to file for a Bitcoin ETF in 2017,
which is
when it was
way before it was popular.
When it was $3,000 a token. So maybe I'm a crypto hippie, but I think yes, we suggest that people own both. Just to have that as a role in their portfolios, because it helps during different market cycles. I would say the one negative thing I don't like about Bitcoin, having followed it for a long time, it's become very highly correlated with the NASDAQ. And people they don't need just another risk-on asset in their portfolio just for the sake of having it. In the long term, pre-COVID, there was no correlation between Bitcoin and everything else, so it was a wonderful diversifier. So I'm just kind of hoping, things go through cycles,
right.
Diane, I'm just hoping the cycle changes a little bit and that correlation comes down.
Do you think that's possible, given how it's looked at as kind of it has the pole position in crypto, right? And when you see how advisors, et cetera, say evaluate your portfolio, they consider that a riskier asset. It's hard for me to fathom that not being considered a riskier asset.
Yes, well, there's different types of risk, right? I was just really talking about how it interacts with other parts of your portfolio, the correlation. I mean, obviously, it's volatile. Now, its volatility has been coming down pretty dramatically. So, I mean, we just basically say it's like a religious war. Either you believe it or you don't, and we don't like to get involved with religious wars at VanEck. So you can do your Bitcoin, you can do your gold, you can do both. It's very hard to persuade people, but the point is more and more people every single year are allocated to Bitcoin.
I like that you put it that way, because that's kind of how I look at it in my head, Bitcoin. That's why I called it the Bitcoin believers. And I always say that I'm agnostic when it comes to that. So, I'd like to just, kind of analyze both sides of it. Let's talk a little bit about inflation and how it factors into your asset analysis and themes that you choose. How is that factoring into how you viewed gold this year and how you see gold positioning? As you mentioned, you look at things 10 years out.
Yeah. So, when we talk macro, you have to always look at government spending, right, fiscal policy, and central bank policy or money supply and things like that, as well as what we've been talking about, which is technology. So I would say that, because the budget deficit is so high, in this era, that's really the most important thing. The way I described it recently, it's like, sure, we're going to have a new head of the Federal Reserve next year, but as long as we have this budget deficit, there's a piano hanging over that person's head, right? Because now, I will say on the positive side, our budget deficit went from 6.5% of GDP last year to 5.9% in the year that just ended, and I'm more optimistic that it continues to go down, because spending has, whether you like what Trump has done or not, spending has come down, spending increases have come down, and we have revenue from tariffs. So if the economy continues to grow, that should be good for walking away, if you will, from the budget deficit problem. So in the short term, I'm not convinced I really care that much what the Fed does in that context. You could argue there's inflation risks on both sides. I just really think that the 10-year bond is really affected by the government spending.
Okay. Speaking of the government, we're getting closer to the conclusion of the shutdown, it seems. Are you expecting volatility around when the data starts being released? Economic data, obviously.
Yeah, not too much. What I'm looking at in the market right now, Diane, is very much like 99% of my attention on quarterly earnings out of the Mag 7. That's what's underpinning the S&P. like whether, we've had a little bit of a slowdown because government spending has come down. So, the employment picture is a little rougher than it would be, and I don't think the administration is surprised by that. I don't think it'll get into like recessionary territory, so therefore, there'll be some noise, but I'm not sure it'll affect the stock.
And this earnings season was a strong earnings season.
Very strong.
Yeah, I mean, historically speaking, you had so much outperformance overall.
Yeah, I mean, yes, across the boards, and it's not a surprise, right? The big continue to win. Why? In the age of AI, they're getting all the prompt traffic, and that means their models are getting smarter. So if you and I started a financial media, AI website, it wouldn't be as good because we're not going to get as much traffic as all the other ones. So the big win again, so they're going to have a better product. And again, they don't have to hire as many people because coding is one of the things that's gone away. Not gone away, but been reduced with AI. So it's amazing.
It reminds me of the philosophical question that was on my mind, because I've talked to one of my colleagues about this, because you get more efficient and it's great for margins. But a big part of this economy, we're still a consumer-based economy here in the U.S., is the consumer, right? And if you have fewer people working, who's going to buy all the stuff?
Right.
So that's a challenge, and maybe I won't ask for an answer to that question. But I'm curious to know your thoughts on rare earths, right? We've got some easing of those restrictions from China. And so that allows the U.S. to, I guess, develop a better footing in that space. You've got MP Materials, which has been an outperformer so far this year. How do you look at the rare earth sector?
Yeah, like we were saying before, right, there's sort of the stage 2 of AI beneficiaries in the stock market, nuclear power, the need for power in general, right? Utilities, and then nuclear as a bipartisan, suddenly, out of nowhere a year ago, both political parties said it was okay to do nuclear power. So that was under Biden, credit to his administration. So rare earths I put in the same categories because a lot of those trades, Diane, got this huge boost from the Trump administration, right? There's sort of like, there was going to be more demand, but he really did the maximum policies to help, like with rare earths being onshored and things like that. Again, I'd be in profit-taking mode on some of those trends if you were in there. I know no one likes to take taxable gains near the end of the year, but I just feel like some of those companies are light on revenue. I know they don't dominate
or no
the
revenue. Light on revenue is an understatement, and part of it, because the question I have there is,
it's a family show.
Yeah, I know, I understand. But because the thing is, yes, there is this need for more power, and nuclear is something that obviously is being explored. But at the same time, what I hear from expert in that space is that it takes time. I love that you have a 10-year view, especially for nuclear. It takes time, years, to build that out and to meet that need. So, maybe with a long runway, we could see more growth. So I can see why you'd be a little nervous.
Those people were wrong, and I debated them at the beginning of the year. I don't know who your friends are, but like my colleagues,
I'm listening.
Is that's definitely was a risk, but then it became a global trend. People were turning on nuclear reactors across, like from the UK to here, almost every country now. Japan just flipped, which is they're just a couple of years after Fukushima. So it's not just a U.S. world where we had to hold our breath and wait for 5 years. All these projects are being signed up. So that was the good news that ended up developing. But you're right, coming into the year in January, that was a bet.
I want to go back to Nvidia as a topic. I think back to not the comments that Jensen Huang made about needing more supplies to make the chips because there's just so much demand. The worries that he said recently, which he walked back a little bit about China, and where they sit as a competitive threat. How do you think about it as an investor, or managing billions of dollars?
Well, the first thing is if you're allocated to the S&P, do I care what Jensen Huang said about China beating us in an AI world? Not a lot. because if, like a lot of U.S. companies are using Chinese LLMs, like software, they're going to use the best software. I mean, that's to our benefit, and they're open source models. So do I care that their models are good? No. Now, if I'm an American, right, take my investor hat off, of course, for defense purposes and other reasons, I don't want them to be beating us. And frankly, I think Nvidia is so far ahead. I'm kind of a little skeptical on that, on the hardware side, but definitely on the software side, it's very competitive.
When you think about 2026, we talked about AI as a theme, and obviously you don't know. No one has a crystal ball. But what are you? How are you approaching thematic allocations for 2026?
Well, like I said, I want to step back on some of the stuff that's been working this year. Definitely would keep U.S. equities, keep gold, and then I think where are some underappreciated sectors, healthcare. And I would look at some of the natural resource companies that are going to be needed for this sort of big capital expenditures that we're doing here in the U.S.
For healthcare, I'm curious to know, because yes, it has been, there's been conversations about like it has room to run. At the same time, there's risks. The Trump administration has come after so many, different companies essentially with, not necessarily identifying companies by name, but we want to bring down prices here. It's great for the consumer, but for the companies, it starts to put pressure on their margins. And then coming after companies that would be tied to the ACA Affordable Care Act. And then you see they've had a lot of dings. What makes you not too worried about that?
I mean, I think, when you look out over the next 20 or 30 years, I think there's no doubt, well, in my mind, the sector that needs AI the most is the healthcare sector, right? So 20 years ago, my medical records weren't even digitized, right? Forgetting what software and AI processing, they weren't even in the same computer. I went to the doctor a week ago, and they still had to look at two systems to see if I needed a tetanus shot. So I can't wait for that whole, I think there's going to be a lot of losers, to your point, but I think there's going to be a lot of winners as well. So definitely a diversified approach. But I feel like some of the stocks, like United Healthcare, have been so beaten up that I know the contrarian me says, yes, I get the political risk, but I think for a longer term perspective, I want to have some assets in that area.
Okay. And then where do you see the biggest opportunity for 2026 and the biggest risks?
For us, mainly, we just always want to be invested in the markets, right? So the biggest risk would be if the Fed slams the brakes. That's really unlikely, right? Or you get to valuations, to your earlier question, that are just really unsustainable. I don't feel like we're there yet. So I think keep your stocks, keep your gold, and fixed income is I think it's going to be fine too. You're just really going to earn the yield on your fixed.
I was going to ask about fixed income, so it's more of just a protection.
Yeah, if you look over the last several decades, which I did, you really don't make a lot of money on bond appreciation unless interest rates go to the floor, which we don't want. So you're going to make whatever the yield is, 5, 6, 7%. I actually like. It's a little controversial area, but business development companies.
Oh, the BDCs?
Yeah, because they're sort of like alternative credit, but they're in liquid form. So now they will trade at a premium and a discount, so you kind of got to know what you're doing. But I'm willing to. I think the economy is good enough. I'm willing to take credit risk.
What's been the biggest surprise to you this year in markets? Was it the tariffs? We haven't talked about tariffs at all.
Yeah.
I mean, the Band-Aid is back on, if you will, because it was the rip the Band-Aid off, Band-Aid's back on.
I mean, we're going to get a lot more political headlines going forward. Sorry, I know this is a backward look. Right, I think the Supreme Court might rule against the president on tariffs. The midterms are going to start gumming up the works. So I wouldn't expect a lot of support. I think the Fed will be a bouncing ball on cuts. I mean, we do have some residual inflation, so I don't think that's going to be an easy decision for people. But looking backwards, I think the AI second wave trade, like nuclear, that just shocked me.
Okay.
You know, that there's suddenly the whole world is like piling into this electricity play.
All right, Jan, thank you so much. We really appreciate your time, your insight, reflection on the year, and vision for the road ahead. Thank you. That's Jan VanEck, CEO of VanEck Funds. Our thanks to Jan for joining us here on Market Overtime. That does it for us here. But remember, you can find all of our Market Overtime episodes on YouTube. Subscribe to our channel and never miss an episode. Be sure to tune in to schwabnetwork.com for all your market news. I'm Diane King Hall. Thank you for joining us.